If you've ever heard about GST but aren't sure what it means, you're in the right place. In this video, we'll break down GST, goods and services tax, and show you why it's so important in today's world. Let's get started. What is GST? GST stands for Goods and Services Tax, a value-added tax applied to goods and services. It's designed to replace multiple indirect taxes like VAT, service tax, and excise duty. GST makes taxation more straightforward by combining these taxes into a single system. This unified tax is levied at each stage of production and distribution, but only on the value added at each stage, ensuring transparency and efficiency. Types of GST. In many countries, GST is divided into categories to handle taxation across different levels of government. For example, 1. CGST, Central GST, collected by the central government. 2. TST, State GST, collected by the state government. 3. IGST, Integrated GST, applied on interstate transactions and collected by the central government. This division ensures that the revenue is distributed fairly between the central and state governments. Why is GST important? So, why is GST so important? Here are a few reasons. 1. Simplification. It replaces a maze of indirect taxes, reducing confusion for businesses and consumers. 2. Transparency. Taxes are clearly defined and easy to understand. 3. Boost to the economy. By eliminating the cascading effect of taxes, GST reduces the overall tax burden on goods and services. How does GST work? Here's how GST works step by step. Let's take a simple example to make this clear. Imagine a manufacturer produces a shirt and sells it to a wholesaler for $50. The GST rate is 10%. The manufacturer adds a GST of $5, so the wholesaler pays $55 in total. The wholesaler then sells the shirt to a retailer for $70, adding a 10% GST of $7. The retailer pays $77 in total. Finally, the retailer sells the shirt to the customer for $100, adding 10% GST of $10. The customer pays $110 in total. Here's where the input tax credit comes in. The manufacturer keeps the $5 GST they collected. The wholesaler claims the $5 they paid to the manufacturer and sends only $2 to the government out of the $7 they collected. Similarly, the retailer claims the $7 they paid to the wholesaler and sends only $3 to the government out of the $10 they collected. This way, GST ensures that only the value added at each stage is taxed, and the total GST collected by the government is $10, the final amount paid by the customer. No double taxation occurs, which is the key benefit of GST. Benefits of GST. Let's quickly recap the key benefits of GST. 1. Reduces tax cascading. 2. Simplifies compliance with a uniform tax system. 3. Encourages transparency and accountability. 4. Boosts exports by reducing tax costs on goods and services. Challenges of GST. Of course, like any system, GST has its challenges, such as 1. Initial difficulties in transitioning to the GST framework. 2. Compliance costs for small businesses. 3. Complex filing procedures in some cases. And that's everything you need to know about